Well, hello, everybody, and welcome to our first time buyer Southern California market update. This is for November 15th, 2022, and this is our market update that is geared just towards entry level buyers. My name is Stephen Meade with Domicile Real Estate, where we are on a mission to help California's renters become homeowners. And one of the questions that we have gotten maybe 25 times in the last month, I'm convinced, is are first time home buyers screwed? And I don't think first time home buyers are screwed, but I definitely think you have new challenges that are different than the challenges you might have faced a little while ago. And I wanted to take a look and talk a little bit about some of the things we're seeing and some of the things that might be helpful in the next 6 to 12 months and some of the things that might not be so helpful. So let me start off this by saying that a lot of the housing market and a lot of the mortgage market are based on confidence, which is just like what normal consumer behavior is, right? A lot of it is based on this idea of confidence. And last week, some inflation numbers came in that were still high inflation numbers, but they were much lower than people expected. And the message that gave was that there is confidence that the Fed's measures are actually working to control inflation. And what did this do? The stock market rallied, and also the mortgage market rallied a little bit as well. But there's another consequence to that, and that is we are seeing some economists start to change their projections about 2023. And I'm just going to report the news here for a couple of these, right? This isn't factual. I'm not even sure whether I agree with these projections yet, but CoreLogic, which is a company that makes a lot of data products in the real estate industry and collects a lot of real estate data, they are predicting that nationally there will be a 3.9% increase in home prices in 2023. The National Association of Realtors chief economist Lawrence Yun is predicting a 1% increase in home prices in 2023. They both have kind of a couple different dates that they're measuring from, but for all intents and purposes, think 2023. And this is a drastic change, I think, than where we were maybe a month ago, where most economists really were predicting nationally flat to a small decrease, right? So we've kind of shifted things up. And I think what's happening is there's a belief that in a coming recession will possibly be shorter, might come sooner, and we might pass through that sooner than we expected, and that there is an end in sight to these interest rate increases. And so that's really kind of altering the landscape a little bit. So let's go through the numbers, and I'm going to tell you what I think what this means for you if you're trying to make some plans about buying a home. So this is, again, our entry-level closed pricing. So if you look here, we're around 710,000. We are kind of around in the neighborhood of where we were at the beginning of 2022. So basically, we are erasing our prices back to the beginning. And we are here at 499,000. Again, very similar, maybe towards the end of the year here, more towards the end of the year for our entry-level condo. So think of it as like 2022 didn't happen from an appreciation perspective. I think that might be simplifying it a little too much, but if that helps you understand it, go with that. If we look here at our total monthly payment, right, this is the number that has not, unfortunately, gone back to beginning of 2022 levels. So if we look here, what are we at? 5,832 on our entry-level single-family home. Again, that is based on 5% down, including mortgage with taxes. It's based on a 30-year fixed loan, which at this point we actually are not recommending to our clients. But that comes out to 5,832. Where were we at towards the beginning of the year? Well, we were right around $4,200. What I find fascinating in this, right, is that I feel like when this run up happened, this is where we would have seen if prices were going to drop, if they were going to just go downward to sort of equalize this back to these year ago payments, I would have thought it would have happened somewhere in that June, July timeframe, right? The market would have reacted a little bit and downward, but it really didn't. And I still believe if you're the kind of person waiting for some kind of 20% drop in the market, um, it's not going to happen. I don't think you're going to see that. And I think that's a hard pill to swallow for a lot of people. You know, I received an email this morning from a client that said something kind of fascinating. I'm going to paraphrase it here, but basically she said, it just seems so hard to believe that home prices in our price range could have shot up $200,000 in the last 2 years and that they will stay there. And I think, yes, it's hard. It was hard to believe to watch it happen in the first place, right? Let alone for it to stay. But we're just not seeing a huge number of market forces that says there's going to be a gigantic market correction. Things are looking like we've already seen some price reductions, right? And I think we might see a little bit more before things turn around in 2023. I think maybe if you're the kind of buyer out there who is a value shopper, I would argue that maybe you've got another 3 to 6 months, right? That you can kind of have this nice window, right, where you're kind of at a little bit of a minima before we start to see things change course a little bit. That's my personal prediction, kind of based on what we're seeing with both the rate market, what economists are predicting, and sort of where inflation is going. If we look at our minimum household income, right, on this entry level single family home, we are at $143,000. And for our entry level condo, we're at $107,000. Now, remember, this is household income based on a 30-year fixed. I still think there are a lot of opportunities out there for homeownership. It might not be the type of home that you were looking at. And I think that's important to really take a look at. And in fact, it might be something that is not as nice as what you are currently renting. And, that's probably the number one thing that we see with our first-time home buyers, especially the more affluent ones, is they have a fairly high standard of living in rental housing, right? Lots of amenities, brand new building, all the finishes are upgraded. But really that's kind of trading, right, your future prosperity for kind of some comfort today. It's making kind of more of a short-sighted decision to stay based in that. Now, if we go on here and we look at our absorption rate, this one is kind of interesting to me. The blue line is entry-level single-family homes, and that has kind of consistently been in the 70s here, right? That's been a fairly strong number. It basically means if you've got the right product and it's priced right, there are buyers out there. But if you look at the condos, they've really started to kind of turn a little bit. And what I'm wondering, is this a temporary situation, or are we finally seeing that trend that I honestly would have expected to have seen a lot sooner, which is that the condo market tends to be a little bit more volatile. Whatever the market's doing as a whole, the condo market tends to do it a little bit more. The reaction is a little bit bigger to economic conditions. And are we finally starting to see that in our entry-level condo market? If we look at our overall total inventory, well, guess what? It's a lot more than it was a year ago. A year ago, we were just under 1,500 houses. Right now, we're at about 2,600 for our entry-level single family. And in the condo world, we were at 1,000, and we are about 1,400. So 1,500. So basically figure about a 40 to 50% inventory increase there, and maybe a little bit more here on our entry-level single family home. But what I think is really interesting here is what you're not seeing is that these are not wild amounts of inventory to have, right? I mean, we're inventory didn't quadruple. When I look back and when I remember 2008, 2009, I mean, inventory went from nothing up by like a factor of 5, right? It wasn't up 40%, it was up 400%. That was the magnitude of changes that we saw. So that's the other reason that I think we're not seeing these huge price reductions like I think people were expecting to see. I also think we've still got some sellers out there who are kind of wishful thinking, right? And agents who are a little too eager for a listing and will put it up at any price, even if they think it's not a very realistic market price. If we look at our 14-day still active, that has really kind of ridden in this zone here. The condo number is a little bit higher on this side, but really this is kind of stabilized out. And then if we look at this final graph, this is the one that I think does make me think a little bit, right? And that is, this is very different than last year. One of the things that we are seeing is now that we're entering kind of that Thanksgiving, Christmas, New Year's kind of tri-vortex, right? We see slower buyer activity. Last year, we saw so much slower listing activity that really didn't affect the week supply of homes. This year, it's different. That week supply of home trend line since October is heading up, right? And that's maybe more of a normal response that we would see in a market. Last year was unusual, but we have 11 weeks of relative inventory for entry level single family homes. And we're here right about 15 weeks. And so, both of these are up by a factor, right? I think that you're going to see these numbers come back down in the new year in terms of this week's supply of homes, especially given that our rate reductions last week, we did see the rates bump down a bit. We saw an even bigger change in things like 5/1 ARMs. The other thing that we're seeing, and we're going to do a video on this because I think it really deserves a topic all its own. That is interest rate buy downs, and especially things that new home builders do to try to induce sales, and whether those things really are a good idea for consumers, and whether those are really beneficial deals to do. When is the right time to do a buy down? When is the wrong time to do a buy down? And we're going to talk about that later on this week. We'll probably come out with that video on Thursday. Speaking of which, if you're not subscribed and you don't have that notification bell hit and you're watching this on YouTube, you're missing out on a lot of other videos that we do that might be important to you. If you're watching this on Facebook, then you are definitely not seeing a lot of the other videos that we do based on specific topics that I think are really important for buyers and sellers alike. So absolutely, we're going to put, if you're watching on Facebook, you're going to see down as soon as we're done here, we're going to have our YouTube channel down there in the comments, so you can click on that and check out some of our other videos. Don't forget to like, subscribe, hit that notification bell. Questions and comments, as always, we love them. And we'll see you again real soon.